interest, etc., received by a partner from a firm. Now we all know, which you have been also studying right from the day when you were in your CPT exams or maybe your graduation exams, that there is the concept of this partnership firm. Okay? And in partnership firm you have various partners. Okay? So there are partners. The firm basically gives various forms of remuneration to a partner, which could be in the form of interest, salary, bonus, commission, or remuneration, which can be again salary only. Right? Interest, salary, bonus, commission, or remuneration. Due to, which means it could be payable, in the sense it has not been actually paid, it's only accrued, or received by a partner from a firm, which means that either the firm has paid or it is payable. So any of these forms, which is interest, salary, bonus, or commission, which either has been paid by the firm or is payable by the firm, is treated as an income of a partner. Okay? Wherein he is a partner. So basically this person who is receiving this income has to be a partner in this firm. If he is, then any of these payments that we've just talked about is taxable in the hands of the partner under the head profits and gains of business and profession. Right? So please note that even if it is a salary given by a firm to its partner, it's taxable under the head profits and gains of business and profession. Normally you would assume that the salary is taxable under the head income from salaries. But in this particular case, there is an exception, that this salary received by a partner from a firm. If this salary was given to an employee, it will not be taxable under PGBP. It will be taxable under the normal head of salaries. Right? It's only when this is payable to a partner of a firm. Okay? Now, one of the things that you need to note here is that when a firm pays the salary to the partner, or for that matter interest to the partner, there is only a limit up to which such expenditure is allowed. Right? And this limit is provided under section 40B. You can go through the details of the 40B, and we will also discuss this later in the course of our presentation. Right? If the amount paid or payable exceeds this limit, okay, so let's take an example. Let's say, for example, section 40B provides that the amount of interest which is allowable is 40,000, okay, or the salary which is allowable is 80,000. Right? Let's take two cases, case 1, case 2. Under case 1, let's say the firm paid an interest of 50,000, and in case 2 it paid an interest of 35,000. Right? Similarly for salaries, let's say it is 60,000 and 90,000. Now, because section 40B provides that there are limits to this amount which can be allowed as a deduction, what will happen is that when the firm claims a deduction for such interest, instead of 50,000 it will be allowed only 40,000 in this case. Right? The balance 10,000 will not be allowed as a tax deduction. What this follows is that even for the purpose of this clause, now the income which will be taxable in the hands of the partner will be only 40,000. Right? He may receive 50,000, but what is taxable is 40,000. Why? Because the balance 10,000 is actually taxed in the hands of the firm. Similarly, here it is 35,000, which is less than 40,000. So the entire amount will be allowable as a deduction in the hands of the firm, and this entire amount will be taxable in the hands of the partner. Again, salaries 80,000 is allowable. You paid only 60, which means what? The firm will get a deduction for entire 60,000, and 60,000 is also what is going to be taxed in the hands of the partner. Right? Similarly, for salaries which is 90,000, now only 80,000 is allowable. So what the firm gets as a deduction is 80,000, The balance 10,000 is taxed in the hands of the firm because it is not allowed as a deduction. Okay. And from a partner perspective also, only 80,000 is going to be taxed insofar as this particular clause is concerned. Right? So just to recapitulate it again, any interest, salary, bonus, commission or remuneration due to, which means payable, received by a partner from a firm wherein he is a partner, the relationship of a partner and a firm is there, is taxable as interest etc. received by a partner under section 28 for PGBP. If the amount is not allowed as a deduction in the hands of the firm by virtue of section 40B, then it is only fair that this amount is also not taxed in the hands of the partner. So to the extent 40B disallows any amount in the hands of firm, it is not taxable in the hands of the partner. Right? With that we come to the end of this slide. Now let us look at the next income, which is taxable under the head profits and gains of business and profession.